Hello there. Welcome, everybody. This is Tom Randall from GoldenCare, and welcome to this Integrity Short-Term Care Initiative today. We're excited to offer this. Actually, this is a new webinar topic for us. As you guys know, we've done 30 of them previously in our first batch, and now we're doing about 48 and 38 days that we're probably in the middle of about right now. And this new one is basically kind of a twofold approach that we talked about with Dennis and I when I'm joined, by the way, with Dennis Reiner, my partner in crime, we do most of these webinars together, and we've had some fun doing sales webinars and product training, et cetera. And today's going to be kind of a nice, unique webinar for you guys, and Dennis and I will tag team and back and forth, yap at each other and yap at you, because of the fact that this integrity packaging plans is kind of a unique thing, and we're going to go about it, first of all, just to teach you, if you're coming from the outside totally looking in and you're not in the long-term care trenches or extended care trenches, we're going to teach you a little bit about some of those hybrid plans out there and that part of the market. And then we're actually going to go in and talk a little bit about today how we can go in and use some of these plans, because we know some of the folks on the calls might be selling life insurance already, or some of the clients might have a life plan that they have in place that you might want to partner up with. So we'll have some fun with that and hopefully give you a little bit of education and help you out as well. So if, as most of you know, and I'll let Dennis jump in here, and we've got some new people popping on, Dennis. So we want to keep these webinars a little bit shorter. As you know, we've done a bunch of them, and we'll show you on our website where we have all these other webinars. And I recommend, if you've never been on one of these webinars, please jump on that site when I get to that and listen to at least one or two of those other recordings, and at least to hear the method to our madness, because I don't want to spend a lot of time on it now, but it is a real problem in America with the aging of America, the baby boomers, and people use these plans and they need these plans. 70% of the people will have some type of need for extended care. And we talk a lot about, you'll hear us talking about short-term care and how that's not a great name, because we call it extended care more when we're talking to folks, because they're really robust plans now. And Dennis, I'm going to turn it over to you, if that's okay, where you can just do a real brief talk about kind of the shifting market and how we were in long-term care and we're moving doing much more of the extended care. So go ahead, Dan.
Sure. Thanks, Tom. And thanks everyone for joining us. Yeah, Tom and I have been in this space for a long time. And of course, we've seen the go-go years of the long-term care days when we were having double-digit growth every year. And we were fortunate enough to ride that big wave and ride over $1 billion of long-term care premium during that time, and had the good fortune to take carriers like Mutual of Omaha from number 10 to number 1 in the traditional long-term care space. But what's happened in recent years is that market is definitely gone through a paradigm shift, because underwriting's gotten more difficult. Premiums have gone up. In the traditional space, there's been rate increases. And so there's been challenges, and we saw this coming and really wanted to be on the front end of that paradigm shift to move to these products, as Tom indicated, that's referred to as short-term care, but really are extended care. And the main reason is because these products today are more consumer friendly. They have less underwriting, they have less moving parts, and they are less costly. And we have a great lineup of carriers today with Manhattan Life, with the OmniFlex. That probably took almost 3 years to put together, because we wanted to make sure we got it right. Wellaby's a recent addition that came on tail end of August and has got some great plan design features with that. And of course, GTL is a longtime partner of ours, probably the longest of all these that are listed on this screen. And we've had the good fortune of working very closely with GTL on their Recover Cash and on the home care products. And then there's also True Freedom, which fills a void for us in the sense that it's available in all 50 states. We'll talk a little bit later about True Freedom. And here's the map, Tom, that this kind of lines up. And GTL with the Recover Cash is in 37 states. That's probably all the states that they will get. It's really difficult, unlike long-term care and some of the hybrids where we can get more coverage. The states tend to whatever reason, and we're trying, but they tend to be not willing to to go there. And so OmniFlex, 32 states, we've got 2 more just coming on right now in the next couple of weeks, Oregon and in the West, and in the East, we have Rhode Island, that little state there. So we'll be up to 34 states with the with the OmniFlex, and with Wellaby, we're at 10. And so that's the what we call the short-term care or extended care product states. The home care, these are the standalone home health care products. In previous webinars, I know later this next week, we'll be doing a webinar strictly on the home health care only, but you can again see that lineup. And it's some of the usual suspects. I mean, some of the states that are problematic are those states like California, New York, Florida. And as such, that's where True Freedom comes into play. And we like to have what we call our perfect portfolio that makes sure that we have a solution in all 50 states. And that's really not an insurance product. It's a service contract. Think of it like a membership program, like a AAA that you have to join. And we'll maybe get a little bit more into that, although we've done separate webinars that you can check out on our site, as Tom indicated. And so really the landscape from a 30,000-foot view that we're going to walk you through is to kind of show you, in some of the carriers, maybe carriers that the organization that invited you to come on to this webinar that you're already doing business with. And we're not so much trying to talk to you about the carriers themselves. We're just trying to share with you the landscape so that you can see what the segments are that these carriers focus on. And so, Tom, you may want to jump in and as we line this out and start to kind of show what the menu looks like, really is kind of it's like a puzzle, isn't it?
Yeah, and thanks, and what we're trying to do today is give, number one, some of you who haven't been in the trenches like we talked about, just a little background, kind of a method of the madness of how this whole industry came around. And we're not going to spend a lot of time in this. I'm going to do this really quick. But remember, we kind of started out, and that's where we had that $1 billion number coming from, because we were out here since the beginning, and we're really proud of the fact that we helped design that Mutual of Omaha traditional long-term care plan, took them from number 10 to number 1 in the industry because we had the cash benefit in there and stuff. And traditional LTC was kind of where it was all at back in the early days. The carriers didn't know for sure what the claims would be and the lapse ratios and all that fun stuff. But one of the things we saw moving around is one of the first things came up is people talked about affordability. Back then, the policies were dirt cheap. Underwriting really wasn't as big an issue. But the main objection that a lot of people had when they looked at trying to buy full-blown plans was the use it or lose it, right? They were saying, well, with traditional long-term care, it's pure insurance, right? If you don't ever go on claim, you wouldn't use it. And we have plenty of ways, you've seen in our objection seminars for short-term care, even talking about how to overcome that objection. But that was really, and again, this isn't necessarily a straight timeline of the exact years when all these things came, because short-term care and some of these plans came in at the same time as these hybrid plans or before. But the hybrid plans, that's part of what we want to do today on this slide, is just educate you real quickly in case you are not in the market. And we're going to get into, again, case studies later on that'll be more hands-on. But for now, you might just say, hey, I'm just hitting my Medicare people like you told me to, and start the conversation. And a couple of them came to me and said, well, yeah, but what do you think about those link plans or those hybrid plans or those, sometimes they'll even call them package plans. And we wanted to make sure you know what we were talking about. And basically what those are is a life plan on a life chassis, and they have a pure long-term care rider to them. And we're not going to bore you with all the details about chronic illness riders in the old days that didn't do a great job. We're talking about the pure LTC riders now that are on life policies. And, One America's out there with a reimbursement type policy that it has a life chassis. They're real strong in the married couples business because they had a little edge on the market. They had a lock on the market for a long time. And Nationwide came in and said, hey, we'll do more of an indemnity type cash benefit. So they're super strong, and Securian as well, used to be Minnesota Life, is real strong with some of their hybrid plans. So again, you don't have to worry about understanding these plans. Again, the main thing I want you to do is just know what they are. Again, it's not just life policies. There are annuities they're called link plans and hybrids that are annuities that will pay out long-term care. And again, Dennis, I don't know how deep we want to go, but we know there's sometimes accelerated benefits only. Sometimes they'll pay additional benefits for long-term care with some of these plans. Like if you had $100,000 life, it'll pay out up to 300,000 or something for the long-term care. So those are all parts of it. I mainly at this point just wanted you to be aware they're there. If somebody says I have one, you can say, great, which carrier is it with, and just verify that they're not blowing smoke at you and say, great, I'm glad you got something in place. If they talk about it as a question, I just wanted you to at least know what it was. Make sense? Here I said I was doing this fast and I got a little windy there. But on the other side of the market with traditional, people started talking about, long-term care tightened up their underwriting after a while, and they started getting a little more expensive because they started to understand people use these policies, right? So they started to be a little bit more pricey for the bigger plans, especially. And short-term care plans have really risen this last little bit of time, and that's why we're doing this short-term care initiative. They're much simpler, much easier. You can do short and fat and have them very robust. We talk about the $1 million plans we can design with these short-term care plans, so they can be super strong. But more importantly, you can really mold them down and make them super affordable for almost any age. And mainly, the biggest ability of these plans is what? You've heard me say it if you've been on any of our webinars. The biggest ability of some of these plans is their availability. So underwriting, if they're out there and you can get through the underwriting net, more power to you. Then from there, we kind of look at kind of a dual puzzle piece, if you will, where these home health care only plans came in, and those have really risen lately because of the fact that much bigger underwriting net. Remember, literally 2 questions. Hey, I don't think you're living in a facility right now and you're not getting care right now. You don't need help with your activities of daily living. Tell you what, we can get you a home health care plan that's pretty strong. And they're very, very, very affordable. Obviously, to protect the care, they got to limit some of the benefits and all that fun stuff. But they're really nice little plans. And that's our other part of our whole initiative here. With, you see there, all those on the right-hand side are part of our Integrity Short-Term Care Initiative, right? So we have all these plans available for you, and those are great complements to every other plan. And then in the middle, there's this new GI Life LTCI plan. It's not part of our initiative, but we wanted to bring it up just so you were aware that it was out there. And again, it's Chubb Life, and it's a really cool little affinity. Dennis, do you want to speak on that real briefly? I mean, we're not here pitching this product, obviously.
Yeah. I mean, we're just trying to, again, give you the landscape of where it goes. And what we're trying to do is take underwriting off the table, and some of what Tom has indicated with the hybrids and traditional is, some of the younger buyers, they're great. But as you start working with older age individuals, some of those solutions become problematic because you can't, in addition to availability, everything starts and stops with underwriting. And so this one has a unique, it's built on a group chassis, but it goes down to one individual life and as close to GI as possible. And I think the main thing as we look at this is just to give you an idea so that and there's evolution. There's continuously new products that were coming into the marketplace, and there's going to be more that are going to be out there. And again, you don't have to become an expert on all of this, but we're trying to kind of set the stage here for how we're going to show you again how these options can kind of work together. And Tom, I know that we've hit these stats before about the 70% of individuals that are 65 and older that will need care, and 90% have that conversation. And actually, even with that 70%, 90% of married couples will actually need some form of care. So when we talk about what we call the complete package of protection, or stacking these together, or a combo approach, it really, in coming back to that previous landscape, we're not trying to ignore, for example, IUL, Index Universal Life, or someone who is out there today selling a lot in the term space, 10, 20, 30-year term products. We're just trying to let you know that you may bump into situations where your client already has something, and it doesn't mean that they've got the complete package. So, Sam, I'll let you go on and talk a little bit more.
Yeah, absolutely. Thanks, Dennis. And again, that first slide, the puzzle pieces and stuff, was mainly just for some of you who might be new to it. And I know a lot of agents are, trust me. And there's agents use link benefits, hybrid benefits, and package benefits kind of universally. You'll hear them say that. So I wanted you to be aware that there are products out there that are one product that have either one part or two parts to them. A lot of times it's an LTC true rider that's a separate that they can have tax deductibility on, and you have to have CE certification to sell that long-term care hybrid plan, that one plan, because it has a real intricate long-term care portion to it. And then like that Chubb product, Dennis had, one of the unique things about that is it's set up in a unique way that you don't have to have that extra certification. So it is, again, like he said, an evolving market. But the main thing we want to hit on this slide, and we're going to get into some case studies as we finish up today, and I think you're going to like what we're going through, because that was just to educate you if one of your clients happened to say, you know, hey, remember our wholesales, all of our webinars, hey, start the conversation. No matter what, always start the conversation, because 90% of adults have never had a conversation about it. So you have built-in people, whether you're selling life or health or Medicare or anything else. So start the conversation. Hey, before I let you go, I want to just make sure you have your extended care taken care of, because it's so important today. Remember how we talk about that, and we get more into that in our webinars on sales. Because remember, packaging is a big deal. We have some career folks over here on our team that just do a tremendous job, where they're in the long-term care trenches, they're in the extended care trenches up to their neck, and they do a great job of saying, I'm not just going to sell you short-term care like an Omniflex or a Wellaby on its own. I'm going to sell you a short-term care and Omniflex with another home health care plan on top of it to really give you added protection. We call those stacking policies or packaging. So my point on point B here, 1B, is just say, no matter what, always start the conversation. And whether you're selling med sups, MAs, life, final expense, anything out there, you always have room to say, we need to complement it with at least a home health care plan or a short-term care comprehensive plan. Do your best. Again, we talk about a lot of that with the underwriting and the tools we have to help you. So that, I call that a prelude, because I decided to show an example of that before we jumped into topic 1. And I didn't want to go renumber them, topic 1, 2, 3, 4. So anyway, what we're going to get in today is a lot of you, especially in the final expense market, if you're selling life insurance, or the MA market, and even some of the med sup folks you're dealing with, anybody you're talking to for any type of other product, you might be coming across some younger folks, maybe in their 40s or 50s, and maybe they're really premium sensitive. They're saying, hey, I'm still paying off the house. I got kids going to college. You know, I'm a little bit insurance poor. I don't know if I want to dive into it. And topic 1, when we get into that, it's going to be great, because we're going to get in and talk about somebody in there. I think we used a 50-year-old example for that one, and we used a life with a complement of a short-term care or home care plan. So you'll see that one when we get in just a couple seconds. And then also we talk about, what about seniors? I use that a little loosely. I think we use a 61-year-old as an example. And maybe they have bigger health issues, and you know, they're still somewhat premium sensitive. We're going to show you some really cool options to ways to say, if they have a life plan, or you're putting a life plan in place, if you happen to be selling life, more power to you. Stack it in there with one of these policies, and you can do some bang up job there. And then we're going to finish up at the end of the day talking about, you know, what about any age in any state? And again, you guys probably know, because you're a sharp group, we're going to show you how to use that True Freedom plan that's part of our short-term care initiative. And remember, the cool thing about that plan, it's not insurance. So it's not even based on time at the age of application, et cetera. The premiums are the same. It's a prepaid healthcare plan. So whether you're 18 or 99, that thing will be at the same price, the same premium for you, because you can get literally pennies on the dollar. And if we have time, I don't know if we'll muddy it too much, because we have True Freedom training on its own, but we're going to show you the beautiful part about that. What's one of the biggest abilities of these plans? Availability, right? So the biggest abilities of these plans is that it's in all 50 states. So even some of those STC quote unquote trouble states we talked about, California, Minnesota, they don't want to play ball. They don't want to have these. Washington, lots of them out there that Dennis talked about that don't want to have a true short-term care. So Dennis, I can quick do this Omniflex and ML, because that prelude that I talked about on the previous screen on point 1, that was something we used where we talked about just how some of our agents just do a bang up job. And I hope some of you on the call and some of your agents at some point will do this. And I'm using Omniflex. And again, like Dennis said, we're not pitching any particular plan today. We're just talking conceptual, but we're giving real life examples. We obviously had to pick out one plan. So we're going to use Omniflex in our examples and GTL and some other products as well. So that being said, Dennis, if you want to take this, or I can, it doesn't matter. I'm just talking about taking a short-term full-blown plan and adding in the home health care with it. So do you want me to roll?
Tom, I think the important thing with this, Tom, is we're talking about in this situation as far as a limited plan. And that was why you wanted to illustrate the OmniFlex, because it has the two-tier underwriting. So
Absolutely.
a two-tier, someone can get a full-blown plan up to $400 a day and $300 a day for home health care, $400 on the facility. But with the limited plan, we're limited to $100 a day across the board. And you can just see again for that 50-year-old how affordable, Tom, that is. At really a $397 a year annual premium, or $33 a month. And remember that with OmniFlex, it's the only product that we do have in the short-term care space that has the RX reimbursement, and you don't have to be on claim to actually get a reimbursement of up to $300, $10 for generics and $25 for a brand name. And so you can see how the ability to get a $300 reimbursement if a client did have prescriptions. And Tom likes to talk about the number of individuals, and I don't even think, Tom, it's people 65 and older. You indicated about your own personal life. You're a little older than 50, a little under, just right there, slightly under that 60 benchmark. But you talked about how even in your own life, how you're taking some prescriptions where you'd easily surpass that $300 a year reimbursement. And so you may want to talk about that for a quick second, and how that mitigates that premium, and then we'll get into the comparison of packaging it with the Manhattan Home Healthcare Select. And we're just trying to show this, keeping it consistent with one carrier in this particular story.
You bet. And again, thanks, Dan. And what he's talking about there is, we talked about the average 65-year-old, for example, that has 27 some prescription drugs or refills per year. And it's something a lot of agents, especially if you're not in the trenches and have done a lot of it, you're not used to seeing that whole shoebox full of meds that come out when you're talking with some of your seniors, because you don't have to get into it much. Some of you with the MA business and MS, you know that. And even for myself at 58, just with 3 meds, I'd be pushing, getting close to that 300, even at 58. So with 3 meds getting refilled 3 times or 4 times a year, that adds up fast. So that's what we'll show, and we'll talk a lot about that prescription drug. We're only doing the comprehensive short-term care today on this one example. But remember, that was one of the reasons we use OmniFlex here, because they have a $300 reimbursement. So that $397, if somebody used the whole thing, and some people will, a lot of people will, we're finding, is $97.80 as opposed to $397. So look at that, $815 a month. The point we're making here, remember, greatest ability is availability. What you're going to see with these plans across the board, and that's the reason you have like Aetna out there in short-term care, comprehensive, GTLs, Recover Cash. The healthier you are, the less expensive these plans can be for how robust they are, right? Because they don't have to take quite as risk. Same thing with, it's kind of funny how that works, because same thing with these home health care only plans, they're very inexpensive because they have to scale down the benefits a little bit, and they can be a really good deal. But like, look at this example with OmniFlex for a limited plan, even where we throw the net pretty wide and there's a lot of people be able to get it. That's unreal to be able to get $3,000 a month for a full year, for $8 a month after that net premium reducer of the RX benefits. So you're going to see that as we go through, and then we're going to show some extreme prejudice towards how strong these home healthcare only plans are. Because check this out. Here's a home healthcare. We're using Manhattan, and here GTL's got a great home healthcare too. You'll see later on in this webinar. But if we use a deluxe plan there, $450 for benefit wise for a full year, $365 annual premium for this 50-year-old. $30, and then they have the same type of reimbursement benefit. And I have a little asterisk there because of the fact that they actually have a $600 available. But for the first example, we just said, what if it's the same $300? You get to double dip, right? Even though it's the same carrier in this case, you can have the reimbursement. They were actuarially put together as their own plans, so you get $300 for the same meds, same refills, reimbursed twice. So look at that, $65 for the premium after reimbursement, $5 a month. So if you look at a combination of both of them before any RX reimbursement, you get $762 annually or $63. But again, almost everybody you're working with who can't qualify for true traditional long-term care plan is going to have some meds in their back pocket. And if you look at that, 762 after the double RX, 300 using that, 162 annually. So I didn't even go into there, by the way, that this plan, the deluxe plan for Manhattan, allows a $600 prescription drug. So you could lower this another, how much? $300, right? You could lower this $13 could get lowered another $25 a month, which gives us what? Negative numbers on that. Pretty scary, right? So you really could have really inexpensive overall cost. If you had a $600 reimbursement here, you'd have another 300 off. So all we're trying to show you there, you can make these plans super affordable, and you can stack them together and look at the benefits you're getting with Omniflex for this plan. Even a limited plan, $3,000 a month or $36,000 for the year, with the restoration, which I won't spend time on today, could double that. So really strong restoration in these plans. And then you have the same thing on the home health care coverage, $3,000 a month, $36,000. Remember, Dennis and I could bore you to death with stats talking about the fact that sometimes having a home health aide come in for just a few times a week for just an hour or two can keep you out of a facility for a year or so. So it's really easy to talk people into the value of having some home health coverage too. And this one has facility, right? So home healthcare select basic coverage, this is a design benefit plan. You'll have to get into our actual training, so we won't spend a lot of time on it, but potentially you could have $164,000 worth of benefits from that home healthcare only plan. And they have a home health aide. They do limit that because of the fact that the underwriting is so loose with this one that it's another $7,200. So $171,450. So if you look at the combination of both, tell you what, you're looking at, I would even put seriously there, because we didn't use the full RX benefit and we're down to $13 a month or less because we didn't use the full RX. And that would be a potential of $243,000, $450, and with restoration up to $315 of potential coverage for that client. So needless to say, that's almost a no-brainer, right? And that's the power of packaging these together when you're selling an Omniflex plan, whether it's full-blown or limited, and any of our short-term care plans. Adding on a home health care plan can just be a really nice way for very little money, especially if they have some meds. You can do some tremendous things with that. So I'm going to turn it back over to Dennis, and we'll talk a little bit, if that's okay, Dee, about a younger premium sensitive client now, where that first one was, they had some health issues. We got a great deal with stacking of short-term care and home care, but now let's look at a life package plan, because that was what we called the webinar, and see some examples, if that's okay with you.
That'd be great, Tom. And again, we're just keeping it simple here with the Manhattan story. We know that many of you on this call might have your favorite carrier that you're selling some form of a final expense or some form of a life insurance plan with. And so we're just doing this to for those of you that say, gosh, I am not as comfortable going from one carrier to another with final expense with one carrier and then the home care with another carrier. So we're showing you how you could keep it actually with Manhattan. And this 50-year-old example for a $20,000 amount of coverage, and we'll talk about the underwriting in just a second because it is streamlined, but you can see that that's $47 a month. It's very affordable, especially given the fact of how easy the underwriting is. As you know, many of you who are in that final expense space, Integrity as a whole is the largest writer of final expense in the industry, and there's several carriers where there is proprietary products, just like we have with the extended care market. But if we layer that back in, Tom, with the same discussion that we just had with the home health care, you can begin to see how strong that is in terms of with the Manhattan, where it's really the same story that we just had with that same 50-year-old example as far as the 450. That's the deluxe. That's the highest plan that Manhattan has. There's two other plans actually that have a lower benefit of $300 and $150 that would be even a little bit more affordable. So again, finding a plan for any budget is really, if you have to go lower on the plan option with Manhattan on the home health care select, you could probably cut that premium in half if you went down to the lowest plan level. But again, look at the combination of both, and look at the deluxe after that, only the $300 RX. You would be available on the Manhattan, as Tom indicated earlier, for up to $600. Now, the lowest plan, which is called their Classic with Manhattan, only does have the $300 reimbursement. But the Premier and the Deluxe, the two other plans, do go up to the 600. So you can see, again, how that is so affordable in the combination of both. And now when you get into that whole net story, I'm going to just drop down, Tom, for the interest of time, to see how the combination of those premiums of dropping that to $28 a month. And so if you look at the final expense, the $20,000, you look at the Home Healthcare Select, and keep in mind, again, that is all not so much the final expense. That is that's the $20,000 face amount, which pays at death. But the Home Healthcare Select, just like the OmniFlex, that's full indemnity. That's a cash plan. And if you look again at having the additional home health aid on the Manhattan, that combines up to $171,000 of coverage, which is pretty incredible, along with the fact that you've got that $20,000 face. So that use it or lose it scenario is, if they don't use it, obviously they know that everyone's going to, all of us, we all have an expiration, right? At some point, some will have an untimely passing, and some will live a long life, but at some point, that will be inevitable if someone has coverage that will pay out that face amount. But the combination of both, life with home health care for as little as $28 a month, are you kidding? This is a great story, and why we're trying to share this with you is not just to give you the complete package of protection and how you can do it, because you'll come up with your own scenarios, but to let you know that if you are a resource to that client in more than one area, that stickiness of that relationship will go up tremendously as it relates to your persistency. And again, we're trying to illustrate this, not to give you robust plans in every scenario, although we are giving you the most robust plan with the Home Healthcare Select Deluxe. We're trying to be sensitive to the underwriting aspect. And Tom, you may want to show very quickly here just how easy that underwriting is for that, for that simplified underwriting with that Manhattan Viva Life Term.
You bet. And what I want to add,
whole life, I'm sorry.
The point Dennis made about, remember, those hybrid plans really kind of came around because of the use it or lose it. And with this one, you really have the best of both worlds, right? You're selling a nice little life plan. We have a lot of agents in our Integrity family selling final expense. So again, we're not pushing Viva from ML. We're just showing an example. But look at how nice that is to be able to say, you know what, you get your burial plan, you got it in place. We took care of that part of it. But now, even those hybrid plans that we have, a lot of them might give extra benefits for long-term care or short-term care or extended care, whatever we want to call it. But you're using up your face amount at some point on those plans as well, or a big chunk of it. So this is the best of both worlds. You get to keep your full face amount because it's a separate policy. And then you jump in and have that home health care. And remember, for $28 a month, that's perfect for premium sensitive. And the underwriting, like Dennis said, is super simple. I can handle this, Dennis, since I'm on here. This is actually the underwriting for that Viva plan, right out of their application. And you can see here, I'm not going to read it all to you, but it's pretty liberal, right? It talks about in the last 7 years, and it talks about some major conditions as far as Alzheimer's, et cetera, because this is a life plan. So they're going to want to check and make sure that you have some no morbidity issues or mortality issues, and then it talks about disorders or hospitalized or advised for surgery that might scare them. And then it gets into some of the things that about risk taking with DUIs, et cetera. So again, these last two down here about prescription meds are not knockouts. Obviously, those are just extra questions they're going to ask about and put up a red flag. As a matter of fact, all of these on this app are not automatic knockouts. They're just information for the underwriters to look into and make sure that they're on top of it. So,
hey Tom, I just wanted to point out that whether we're talking, GTL or talking Manhattan or talking Willoughby, which has a sister company, Great Western, which is actually Integrity exclusive on final expense, is that that in some cases there is a GI component to some of those final expense plans, or there's also the simplified issue, which is what you're showing right now. So again, we're not trying to tell you which final expense or which life plan to package up. We're just trying to give you an example of how it works if you are using Manhattan in this example, but you might be using Mutual of Omaha, you might be using Great Western, so or Transamerica, whoever it might be. We write them all within the Integrity family, and you may have your favorite that you like yourself as well. But the other thing, Tom, as we go into this other example to keep in mind is that when we're talking about packaging with the home health care, remember those rates, unlike the OmniFlex, which is the rate that they start with, is the rate that they stay with, is those home health care plans, whether it's Manhattan or GTL, they're in 5-year rate bands. So those rates will go up, and you need to make sure that you're fully disclosing that to the client when you are selling those home health care only plans. And those are right in the brochure. They're very easy. They are state specific as far as how those rates work. And you'll find it's very easy. You only need a calculator, although the Manhattan software or the GTL software would calculate those premiums for you. They're pretty darn easy with the app form that comes with those particular products, where you have the rates right there.
You bet. Yeah, thanks, Dan. And again, so I'm glad he brought that up, and you'll see that in the product training. We show you the webinar, the site. We actually have some names on this webinar, Dennis, I haven't seen before, so let's keep that in mind when we go through real quick at the end. But we're going into more detail on these than we probably need to, but we used a 61-year-old here for a reason. That's the first time the GTL home health care only plan, that's their age bracket is 61 and above. At 61, I remember what the top age is off the top.
85, Tom. 85.
Yeah, so 61 to 85. So we have all this on the website to show you on the short-term care or the home care only side of it. These life plans, of course, we don't have as part of our short-term care initiative. But in this case, we're using GTL again, same carrier. Remember, you can cross over to other carriers in a lot of circumstances. And like Dennis said, we're not pushing any certain plan. But for a 61-year-old in Arizona, this is maybe more health issues, GTL again. Remember, these home health care only plans are so simple. They're saying cognitive impairment. Manhattan Life doesn't even have cognitive impairment. GTL literally says, hey, are you living in a facility, or are you getting care right now or needing help with ADLs? So super easy to get that on. And same thing, like Dennis said, with the life plans. So for a 61-year-old, in this case, the Heritage plan is their final expense whole life plan, if you will, and $684 for that for a 61-year-old. And then the GTL plan here, in this case, we're using, you're right, I should have put which plan that was, Dennis, I believe.
Plan B, I believe, Tom. That rate looks like it's the Plan B, as I recall.
That was my fault. I put this together and I forgot to put Plan B. So this was what they called their Plan B, or middle of the road. And again, you can see here, very inexpensive, right? $45 a month. But after that $300 RX, it's $20 a month. And it actually includes a $600 RX potential. So this is one of the biggest things to get over on the home healthcare. If you listen to our product training, people are like, what do you mean it's free? Well, that's what we're talking about. The 300, you could have an extra 300 and it would bring this down to less than zero. And that happens actually more often than you think. And again, like Dennis said, it does go up by age groups. So the next age bracket, you probably will have a little bit of charge for that product. So that's why sometimes it'll start out at below zero in some circumstances. So combination of both is what we want to show. $102 a month, even that's affordable for a lot of people you're going to be talking to. But remember, those prescription reimbursements are real and they happen, and they're very, very, very common. So you can get down to $77 a month or $52 a month if you use that whole $600. That's very affordable for a lot of people. When you can get in that $50 range, usually you can get them over the hump and say, you're getting a little life policy, pay more than enough for an average funeral. I think the average funeral in America is about $9,000 right now, but it'll pay for a big chunk of a funeral, if not the whole thing. And you get that short-term care that's $108,000 plus a $3,500 cash benefit. GTL, if you go to our product training, has a really nice T-Care benefit that explains that you get a cash benefit as well for family members. And again, I'm going through this quickly, but I want to just get to the point. Whatever age you have with people, If you can go to the GTL, the biggest thing about them, their home healthcare aid, remember we had to limit that with Manhattan. They just had an upgrade with this GTL short-term home care plan. It's going to make them rise to the top, I believe, because the home health aid is the most common type of benefit you get, and they pay full $300 a day or part of that $300 a day benefit for the home health aid. So in this case, you'll have to look at the product training and how much it pays, but it does go for the full benefit period, 360 days. So Dennis, anything to add on that one?
Yeah, no, Tom. I believe it's $120 a day for the middle plan and $150 for the for their what they call their plan C. But again, if you look at the combination of both for a 61-year-old, that's really affordable. And again, you're accomplishing a couple objectives when you're with that client who maybe you sold the final expense. Maybe you're going back right now and you're just doing a review and with that client, and this is the opportunity to bring up what they already own, and then show how you can layer that in as far as the additional coverage. And again, it's just smart business to take care of your clients, to be a resource, to always go back and look for opportunities to serve them and help them. You never want to have a situation where a client comes to you and wonders why you didn't talk to them about either extended care or about home health care. And so, you're not going to get everyone, but again, the underwriting is pretty darn easy in terms of as far as that heritage coverage. And again, you may have your favorite final expense carrier. You may have already sold someone the Mutual of Omaha Living Promise. You may have sold another carrier. And so it doesn't mean that you have to, when we're talking about this complete package of protection, it doesn't mean that you have to do it from the jump at the very start where you're selling both. You may have already put one in place, and now you're coming back in and completing the story, if you will. And a lot of it is, as Tom said, it really does come down to the state availability. It comes down to the underwriting, which, and again, we're trying to show you how to package this up when you do have health issues and you're somewhat limited on your options. And the other thing is, we know that there's going to be some clients that are going to be more budget sensitive. So we're just trying to help you across the board. And now, Tom, I think this is one that is a little bit of a wild card because some of you may or may not be familiar. And Tom, you may want to just introduce that whole concept here of
and this is that one we talked about in the intro today, the True Freedom plan that we're using. And again, doesn't matter the whole life plan we're using. And real quick on the life plans before we dive into the True Freedom side, Dennis hit a point and it kind of made me click. Remember, we have a lot of long-term care, a lot of integrity folks out there who are writing even full-blown, mortgage protection type life plans or whatever the case may be, the younger folks or middle-aged. Remember the same story. We're showing final expense, little funeral plans here. But remember, even if you're selling full-blown life plans, that's why we taught you what hybrids are. Because if you happen to be out there in the life market where you're saying, I'm selling to 50-year-olds all the time on mortgage protection or some other type of life plan, whatever the life plan is, the conversation's still valid. And you can say, hey, I don't know if you've heard of hybrid or link plans out there that have some benefits in the life insurance that pay out, but your death benefit might go down. Let's keep your life separate where it's going to be there no matter what, the way we designed it. And then we should add in some other type of short-term care plan. And price-wise, it turns out to be a very good deal, regardless of what life plan you're using. So I wanted to throw that in. But getting back to our 61-year-old female here, and again, we can use any age as far as the True Freedom, remember, even if this was a 90-year-old, that's a prepaid home healthcare plan type membership program. So this pricing would be the same, not obviously for the life side, but for the True Freedom. And in this case, this plan, I'm going to go through it pretty quick. If you're not familiar with True Freedom, it's going to be a little bit of drinking out of a fire hose. But the home care plan has 600 hours basically for $397 annually or $33.15 a month. And that's using our special affinity discount we have with these folks. And I believe this is annual premiums, and it averages out to $33.15 a month because you get a little discount for doing annual as well, right? So they also have a loyalty discount Is there a better name for that than loyalty? I don't know if they do.
It's really a loyalty non-use discount that
Yep.
goes down every year, starting in the second year, 10% a year. So 10% in the second year, 20% in the year 3, year 4, 30, year 5, 40. It caps at 40, and as long as they are not on service, they keep that discount for the life of the plan. When they do start service, it does revert back up. And there's recorded training on this, Tom, as you know, on our site. But I want to point out too that we're just showing the lowest plan that True Freedom has, which is 600 hours. They've got plans that go all the way up to 10,000 home care hours. So again, we're just trying to show from a budget standpoint something that's affordable and something that that fills that gap for that client. But it's again, look how that combination of both, how inexpensive that is, and it does have a value. At the average cost of the home care hours with a Visiting Angels or a Comfort Keeper or Synergy is $28 an hour in terms of, and so that, you take it by that number of hours, and that's the value, and that value does go up as the cost of care does go up.
Absolutely. So, built-in inflation protection, right, Dan? Because that's one of the differences when you're buying hours, is this $28 doesn't mean much if they don't go on claim for several years, because as this product develops, they didn't lock in the $28. They're giving you the hours worth of care, and it's going to go up a little bit over time. So that's why this number looks like, where did they come up with the 16.8? It really, if they use this plan 10 years down the line, it would be significantly different and it'd have a bigger value. So long story short, we're just showing you another thing. The biggest thing about this one, biggest ability is availability, right? Even if we were sitting out here in this AZ change to California or Florida or Minnesota, remember, the nice part is some of these states that you guys do business in may not have a short-term care or a home care plan available. And that's where this True Freedom really shines, because people really have enjoyed it in those states where they're at any different age or state. Does that make sense?
Hey, Tom, I know we've gone just a slightly over, and we wanted to show them the actual site for those that are new. And we won't spend time with it because of our time. And I know we're bumping up against another call ourselves that we have, but this is where you go, which is integritystc.com. And everything that we've outlined today as it relates to the product information, where Tom started out the meeting with going through the OmniFlex, and then we've covered, you can see OmniFlex right there. We could have used Recover Cash, or we could have used Wallaby for our example. Is really just to kind of teach you the concept. And there's all kinds of great additional materials here, including all of these webinars that we do are actually recorded and they're put on the site.
You bet. Yeah, and again, we won't spend time on that today because we kept you long, and we really appreciate you guys taking the time to jump on today. I think it was a good discussion because of the fact that I do think this is something that you guys will come across. Even if you don't sell both parts of it, you will come across people who will wonder what those link products are. So now you know way more than most of your clients. So just so you know that, we always tell you that. It takes about a half hour of these training sessions or 45 minutes, and most Americans don't understand extended care. They don't understand the short-term care, long-term care side of it hardly at all. And they certainly don't really understand what link products are. So you just, this little bit of education you got today is going to help you tremendously. If you have it come up, you won't have to feel like you're stumbling. So that being said, Dennis, I think we'll close it up. Appreciate your expertise, Dennis, and I appreciate most of you. More importantly, I should say that you guys jumping on this call. Thank you so much for taking the time to join us again on this webinar, and hopefully we'll see you again on another webinar. And again, if you're drinking out of a fire hose today, check out that site. We have all the backup information you need to help you there as well. Thanks, everybody.
Thanks, everyone. Have a great rest of your day.
The next step is yours. Contact your marketer for more information and to start offering short-term care solutions to your clients. And be sure to sign up for our other short-term care hot topic webinars.